If you don't already have a Forex trading strategy in place, this is the video for you. I'm going to give you 3 strategies that will be pivotal for those starting their trading journey. An FX trading strategy is the template of rules that guide you when to enter and exit trades. However simple or complex it is, the right strategy brings consistency and discipline to your trading. As a beginner, it's crucial to start with a simple but effective strategy that is easy to follow. Remember, the goal is to learn and grow, not to overwhelm yourself. Here are 3 strategies to get you started. The essence of this strategy is captured in the adage, "The trend is your friend." It involves identifying the direction of the market trend and making trades in the same direction with the expectation that the price action will continue. Here's a 1-year chart of dollar-yen as an example. I'm going to add a couple of trend lines from the indicator toolbox. Now, this is a very simple approach in that we're going to see where the support line is in the trend, and then the second line will give us a little bit of an idea where resistance is. The simple idea behind this is it gives us the buying opportunity as the price comes back down towards the trend line, and every time it gets to the top of the trend is where you would sell. Now, traders use a wide range of chart tools to find those trading opportunities, such as the 50-day moving average, 200-day moving average, but this is a very simple way to start by finding the trend channel. This strategy focuses on reading the market's price movements by observing patterns and making decisions based on the actual price changes. It's about understanding the market's natural rhythm and using it to your advantage. So let's take a look at this chart of Aussie dollar against the euro. Now, traders focus on patterns, for example, when buying is becoming exhausted at the same time as the chart is attempting to break out through a level that it previously reached. If we add a horizontal line here, you can see that last time the price failed at the 69-cent mark. So as we've come back down and the buying's taken over again, we attempt to break out a second time. However, it fails spectacularly. So you can see the next pattern that is going to be is bearish formulation right down to the 64-cent level. So traders are looking for confluences where various multiple signals align. And as you can see on the chart, 2 things happened at the same time. The buying was exhausted and we failed to break out. The price action strategy is particularly appealing because it is adaptable to various timeframes and can be used in combination with other strategies. Swing trading strikes a balance between the rapid pace of day trading and the long-term approach of position trading. Swing traders hold positions from several days to a few weeks to capitalize on expected upward or downward shifts in the currency pair. Swing traders often use a combination of technical indicators along with an analysis of market trends and news events. Okay, to demonstrate this, let's look at the infamous Brexit vote from 2016. We're going to use the GB pound against US dollar here. As you can see on the chart, in the days beforehand, there was a strong expectation that the referendum was going to fail and that Britain would stay in the European Union. However, as we all know, this was not the case, and the unexpected result saw GB pound drop from 147 right down to 135 on the morning after the vote. For a few months after, it stayed within the range of 135 down to 130, but as the technical break lower than the previous low of 128 happened in October, we see that the price then dropped to a new level around the 121 level. The swing trader would have had a fantastic opportunity all the way down from 135 to 121, over a 10% return just in a matter of months. I remember the morning of that referendum result, everybody in the investment bank was already at their desk by 5 a.m. Nobody knew what was going to happen that day. It's one of the most memorable days of trading that I have. And the repercussions were just completely unknown and unquantifiable. So you can imagine how volatile the currencies were that day. It's important to test these strategies in a demo environment first. As you build your foundation of understanding movements in the Forex market, you'll find some strategies suit your personality better than others. Long-term success in trading can come from mastering these strategies, but this takes practice, discipline, and continually adapting them as you learn. Be sure to subscribe to our Trading Takeout series on YouTube for a daily dose of market insight and wisdom.